You gonna share the election stat with us later?
Oh, yeah, I can do that.
All right. We are resident elections and finance statistician.
Who's the NBC guy that got super popular because he was...
Oh, I don't know his name. He is pretty bright though, huh?
Yeah.
Oh, I can picture him. I would know him if I
rolled
saw
up
him.
sleeves and the circling the screen.
Yeah, he like knows every single point. I like the data. Hey, welcome to the Closing Beat, everybody. Happy Wednesday. How you doing out there? You ready, Lucky Louie? You see him over there? Where's he at? There he is. Lucky Louie, my man. I hope you're having a good day. We're financial advisors here at Jazz Wealth, trying things a little bit differently with the studio setup and whatnot. And actually, we're making good progress over there. You want to see? You're over here. Look over there. We got the new FinTip series. We're coming back with that soon. That's the other side. It's kind of far over there, but that part getting set up. We're actually breaking it into two sets. So we've got the normal blackboard over there. We have the TV over in this part there, and what will look like, or what is one set will look like two. Money, right? Got to make the dollar stretch around here. But anyways, this is the Closing Beat, just a fun show that we do to cover the stock market and really, try to share something new or teach you something new, and kind of shake off or get a little respect from some of the goofiness that we normally have around here. Because we are kind of immature, but obviously we want to show that we know what we're talking about. And so we'll cover some of that here today. Tomorrow we've got our class, Wine and Wealth. Every Thursday for clients we do Wine and Wealth. We're just one of those financial advisors that if you're busy, that's cool. But every Thursday, I want you to know that you're going to learn something. We're going to cover something about keeping your dough straight, and we're not just those kind of financial advisors that. I don't know what they do, but we're constantly trying to teach. So we'll be covering that, and had some great classes lately with kind of the geekiness of tax loss harvesting, the wealthy sort of advantages that they have and how we apply them. We talked about crypto, the efficiencies and inefficiencies there. So lots of cool stuff, and I keep it simple. I just try to explain some good details there. Stock market wise, hey, what's going on, man? Take a look over here. We'll start... Well, look, the markets were higher because of the tapering talk from the Fed. So markets basically across the board had good days, some better than others there. The Fed is going to taper their $15 billion starting this month, so that was a little bit more aggressive than what we'd expected. Remember, tapering is not raising rates. So if you're not familiar with all the jargon on TV, they've actually been buying bonds in various ways, and so they're going to start tapering that back. So they were spending hundreds of billions a month to buy these bonds. Now they're saying, hey, each month we're going to taper back 15 billion, at least as of now. So this month they'll stop in November. They'll take back 15 billion and won't buy them. Next month will be another 15 billion for a total of 30, and so on and so on. The idea that this would be that it would end somewhere in June or July. I didn't catch when it would end there actually, but then that would be their at that point, they've obviously got the sort of firepower to continue buying if they need to, if the economy's weak and they want to keep rigging everything. But if they do finish all their tapering, then if they need to slow down the economy a little bit, then they can move on to raising rates. And so what you saw today, if we look around the stock market, a lot of that was positive news because it sort of signals when rates will start to rise again. So it means that they're not raising rates right now. We're likely looking into through the summer of next year, maybe even past the summer, for doing that. They also happen to mention that they kept the word transitory. There's algorithms that trade what the Fed is thinking, and that's why you kind of see this. Sorry to bounce around, but this is why you see this level of activity when the Fed makes their announcement. That first few minutes is basically reading the transcript and then making decisions based on that. So there's a lot of volatility there. And they kept the word transitory as far as inflation goes in their comments. The argument there would be, if the Fed dropped the comments of transitory inflation, then that would signal that they were more worried and might be more aggressive. Well, the word was still there, and so the assumption is rates won't be rising until after tapering, and that's hopefully the easy way of explaining it. That's the good news. No real bad news today unless you kind of follow Russia and what's going on over there. They skipped our climate change meeting, which I think is widely known. And now satellites, you can actually look it up. Satellites are starting to show they're building up their presence along the border of Ukraine. They say, no, we're not, but we can all see they are. So I don't know if that turns into bad news, but that's really it. I mean, that's the little bit of news that could be perceived as bad in the markets today. Not much else. I'll start with the Russell because that's where all the excitement's at. What do we talk about? That day right there, right? So you don't buy on that day. There's no need to. You're not missing out on anything. It was the clear leader today. We talked about this break of this pinching pattern here. I can't think of the name for the life of me there. But the break of the pinching pattern being where all the excitement would be. And so the Russell's really been a great lesson for a couple different reasons over the last couple weeks. And if you're watching the show on a daily basis, of course, you learned a little bit, right? And so now you know what to expect next time. You will see it again at some point, but that's what it is. Small caps basically within a few points of stealing first place back. I don't know if you remember, but up until about June, early June, about my birthday there, the Russell was in first place year to date. So it was beating all the other major indices. It's just a couple percent from taking over for the S&P and the NASDAQ taking first place back there, thanks to all that clarity from the Fed today, at least as of now. Well, it didn't quite have a 2% day today. So I was going to say, remember what we talked about when it has a 2% day, very close, 1.79%. But when there is a 2% day, you now know that the next day is basically a coin flip. So we were up 2% at one point, but it didn't finish that way. We look at the S&P. It was a decent day. It wasn't not really a broad rally overall because you had energy down on the day, utilities and industrials down as well. Oil finally pulling back. You finally saw the first real sign of a pullback there, which I know a lot of you are waiting for, right? And rightfully so. You're like, I'm interested. I want to play for the move to $100. There's no reason to expect that it wouldn't start trending that way. So looking good there. Other than that, that was kind of what held the S&P back to not having the same type of performance as the NASDAQ, the Russell, et cetera. So a couple stocks I'll point out if you're interested. Oh, CVS. I love it, man. I love it when a plan comes to fruition there. So they came out with earnings 11% higher than expected. Sales were up 10% versus 2 or 3%. And so you got a recipe for a stock that already showed relative strength. I mean, this is really exciting to watch, where we knew it was already strong. This was just the icing on the cake today. They also raised their guidance going forward, and they're looking forward to a $100 price target. I believe there were a few price targets that analysts adjusted to get to $100. But what a cool lesson there, and I love being able to show you ahead of time instead of just saying, I told you so. I felt that. I just didn't say it. No, come on, man. You got to point that out earlier. Some other stocks here. Bed Bath & Beyond. You might have noticed the action today. It was actually quite a strong day for Bed Bath & Beyond. Even though it pulled back off of highs, up 15%. They're partnering with Kroger. And they're going to do some online and in-store partnerships there, collaborations, if you will. I thought the interesting part here is this is kind of at the bottom, right? They go through all the excitement. Yay, Kroger, we're shaking hands. This is all good stuff. And then at the very bottom, they're like, oh, and by the way, we're going to speed up our share repurchase, the $400 million that we have left, rather than stretch that out over a couple of years. We're going to finish it before the end of the year. Why is that? Because it costs them 1% more to start doing it next year. You're seeing this. There's hundreds of billions of dollars in accelerated buybacks right now. Think about that. Buybacks raise stock prices. Buybacks are increasingly accelerating because they don't want to pay the extra 1% on a $1 billion buyback or something crazy, right? So it encourages them to speed these things up. If they've got the dough, buy back those shares before the end of the year. Well, what happens next year, January, February, March, when now companies do less buybacks, if any at all, because they don't want to pay the 1% surcharge in the new bill, assuming that passes? So you have a recipe now for what could be an inflated, sort of riding on thin air stock market going into the beginning of the year. We all have gains in our accounts, right? So maybe we wait to do some selling for capital gains at the beginning of the year. We also lose the steam of the share repurchases there. I don't know. Could be a volatile January there, right? So I've been trying to point out every time there's an accelerated buyback, just kind of highlight that point. We go to the NASDAQ. That would be your second best performer on the day. New record highs, of course, not bad. Maintains the year-to-date gain as far as the other three major indices there. And it was strong today basically because of big tech. Tapering, remember, is not rate hikes there. If we look inside the NASDAQ, and I only say that because I got a lot of questions. You got T-Mobile with earnings trying to break the downtrend there. You got semiconductors, right? They can now look forward. A lot of semiconductors were doing well based on the presumption of rate hikes down in the future. That is now essentially confirmed, at least for the time being. So you got some action going on there. And if you break through all the different sectors, we've spent some time on this, and I'll kind of highlight this today because I did some stuff last night. If you look through the different sectors of the market, you have some strength, some continued, like impressive strength, Some sectors kind of chopping around and some weak. So like here's consumer discretionary. I'll point out transports, but that's not a sector. Basic materials waking back up, but otherwise it hadn't really done anything. You got consumer staples. Had actually a pretty quiet year relative to the other sectors out there. And so I thought we'd actually take a look at the sectors today in more of a breakdown with maybe some stuff that seems elementary to some, but maybe brand new information to the rest of you. Here's what we did. I had a question asked to me, if there's a higher yield, does that mean I end up with a higher total return? And they were asking about stocks, and I thought, well, okay, that could be maybe a misconception. Maybe there's a myth to it. Let's take all the sectors in the S&P and say, do sectors that currently have a higher yield also represent the higher total return, or is it not worth your while? Is there any stat there? Is there something that we can work with there? And so I'm going to start with this. So here's the current yield by sector. They're ranked by highest to lowest. So we've got every one of them listed down here. You have energy, 3.73% yield. I'm actually using the ETFs for this, so it's something you could participate in. This would be the XLE, this would be the XLU, and so on and so on. So energy's got the highest yield. It also has the highest return for this year so far. You got utilities, real estate, some respectable yields here if you're looking, right, compared to the S&P. The S&P is not in this mix here, so you got at least 4, almost 5 sectors that are doing better than the S&P. And so what I wanted to look at is I wanted to plot this compared to their year-to-date returns. Now don't let it scare you here for a second, but what I did is I said, okay, let's plot the yields against their year-to-date returns and see. So this is what we come up with. What the question was, do higher yields represent higher returns, right? In other words, could you just go chasing the highest yielding sector all the time and end up with a higher return than either the market or just buying all the sectors, which essentially would be the market, or not? So here's what we have. This is every sector plotted with their yield going off to the right, returns going up to the north here. The sort of trend line would indicate that, yes, on average, the higher the yield, the higher the return, right? Because as we make our way to higher yields, we are also experiencing higher returns. There's an issue, though. Energy is an outlier and pulling you in one direction, which is, this is energy right here. Actually, let's just go to this. Here's the different sectors, right? You've got energy up here pushing 60%. You got real estate, utilities, and consumer staples, typical higher yielding sectors. So it's not that higher yield guarantees a higher return, because look what happens. You're guaranteeing more volatility. In fact, the lower yielding sectors are less volatile in terms of their year-to-date returns. So you could make an argument for building a portfolio out of just these, which is these here: consumer discretionary, technology, financial, healthcare, industrials, and communication services. You could make an argument for, I'm better off creating an allocation here, which would generate a higher total return even though the yields are lower. By picking the higher yields, you're asking for more volatility, meaning you got a high return here, you got a lower return here, higher return, lower return. So it's sort of like all over the place. Notice how the returns spread out as the yield gets higher there. That's essentially what I wanted to put out there. Higher yields at the moment do average higher returns, but that's just currently. This is not normal. If we take a look and we plot the yields relative to their 10-year total returns, it's a much different picture, right? Higher yields equal lower returns, and that's how it normally is, right? So it is not, and this is kind of a lesson maybe for people that are not sure, I don't know, I never thought of that. Does that make sense? No, higher yields in the long run are indicative of lower total returns. So it's not a bad thing. You just want to know that your total returns are going to be less than someone that maybe you're playing with tech or whatever. And that's the reason that's like that. You've got tech, you've got communication services. These are much stronger growth type sectors. So if you were to notice higher yield right now does also show me higher returns, don't fall for that in the long run. It's fun and exciting right now, but that's not the case there. You could make the argument higher yields equal higher volatility right now, and so that's the case there. Also, I put everything down like this as well. So I included every sector and the ETF in case you want to take a look and see what's going on there. I sorted them in apparently no particular order. Yeah, I thought I'd sorted these. Actually, they're sorted by their 5-day returns. And so, no, they're not actually. These are randomized here, I guess. So this is the total, each sector in the name. You've got the total yield. You can see their recent performance in case you want to look and say like, all right, I got a high yield in energy. It's pulling back in today, even pulled back more, but it has the highest year-to-date performance, and it's currently in an uptrend. I just wanted to highlight that as well so you could see how many sectors are currently in an uptrend versus how many of them are indecipherable. Yeah, I don't know. So I put those there for you to take a look. And that's kind of my oddball way of just going through sectors, right? What happens is I share something with you. It's either a hit or a miss, but someone leaves a question and I go, that's how we'll make it better next time. Let's go grab that data and share it. So feel free to let me know in the comments there if you liked it, loved it, hated it, don't get it, want us to expand on it, anything like that. And I'll move on to new highs and lows for the day. We have the new highs and lows are 54. Yeah, 54. Okay, I got you there. Yeah, before I do that, Cody, who's winning the Guess the Dow? I didn't even cover the Dow today. Hit me with it.
Yeah, you know. I don't know how I feel about that.
Sorry.
We're not even that far apart, but that's okay. Your leaderboard today, we got Eloy, Bojan, Dennis, David, and Mike. Those are your top 5, and they should be right today. So
don't you think it's Bohan?
Well, from the south, it's Bojan. So
No, that's Bojangles.
Yeah. Do we have that here? Yeah, we do, don't we?
I don't know. I've never been.
Yeah,
Never.
That's Bojan.
Never once been. And Cody's going to share with us here in a minute a little financial.
You want?
You can hold on a sec. I got carried away. I'm sorry. Went down my whole thing. I get excited to share new things. Little financial stats and stuff from the election, huh?
Yeah. Do you want that right now, or do you want to?
Let's do the new highs, and I'll share. We'll knock this out real quick. All right, new highs. We've got 54 of them. 3 new lows, really, to be honest. Western Union, it's a lot of the same new lows. I kind of liked Western Union today, by the way, with the way it broke down and recovered, turned positive on the day. That might be something to look at there. If you like the counter trend bounces and being that kind of person, it's not an easy living to make there, but I thought that was interesting. I liked ATVI, gapping down right around 65 or so. Huge earnings decline there. Naturally, that's a new low. Prudential, just thought that was a cool reversal. It's a new high. So gap down on the day. You can see it if you're familiar with candlesticks there. Gap down on the day and recovered all of it. Hit new highs. That's your financial, there's a lot of financial stocks actually that look like that. What was the other one? Principal? Same thing, right? You got stock in an uptrend here. We obviously have the wind at their sails now with the Fed, the wind at their tail, now that the Fed is clearer on that. So I thought that was interesting. Textron's a new breakout here. I don't normally talk about this stock because they refuse to send me a new plane, but if they do want to send a new plane, I'll talk about the stock more. So just throwing that out there, guys. Just a Skylane. You know what I mean? A Skyhawk even. I'll take that. But anyways, 2% break to new highs here today. It's a company that's really doing well. Very diverse company in the aviation space, but doing well. Hit new highs today. I thought that was pretty cool there, and I'll be waiting for my plane. And Xilinx. This hit new highs, but now you're getting extended. You got some semiconductors here that are very exciting. And if you own some of these and they are very exciting, I'm just saying this would be one of those times I'd be like, I'm going to take a little bit off the table. You know what I mean? Just to lock in a little profit. Hey, a couple stocks in the news, and then Cody's going to share a couple things or something with us here, and we'll take your questions. All right, stocks in the news. Zillow. It's getting worse and worse for Zillow. We talked about this the other day. They stopped buying new homes. Then we said, well, they're actually selling the majority of their homes for a third, a third of those homes they're selling for less than what they bought them for. Today, they actually said, this is a win for realtors too, because I know you guys don't like Zillow. They're closing their home buying business permanently. It now has 98 homes that it needs to sell, and a lot of those are selling for less than what they bought them for. And it has 8,200 more homes under contract that they got to buy now. And they're like, we don't know what to do. We're losing money left and right. This is like a 5% hit for them. And, 5% on tens of billions of dollars. We were talking big dollars there. So that's an unfortunate story for Zillow. And that was actually one of the stocks in the news today. Pfizer, vaccine-wise, starting to get a little bit of action there. Waking back up there. They expect to make $65 billion in total revenue from the COVID vaccine for 2021 and 2022. In 2021, they expect it to be $36 billion that they will make from their vaccine. And so the stock is a little bit higher there, like it or hate it. John Deere, what a roller coaster, man. The employees voted down their agreement. Remember on Monday we said they got an agreement to quit striking and get back to work. They voted it down. They're back on strike, man, so that hurt them a little bit. Match.com, usually pretty volatile with earnings as it comes out there. They missed a little bit. Earnings came in less than expected. Revenue is basically as expected. They lowered guidance going forward, so it's actually not bad performance for Match today, but not good. And Race, which is Ferrari. We happen to own this stock. Very happy with the performance of this guy here. It just got an upgrade. 279. That puts it off the charts. I'll take it. 279 works for me. You got another upgrade from Societe Generale. 290. That'd be the highest, I believe. That's pretty high. So nonetheless, very extended in the short term. You like to see it if you own it. I want to point that out. And GameStop waking up here a little bit, up 5.5% on the day. Hey, they're worth $16 billion. They don't make any money. Go for it, right? A couple other stocks. How do you say that? Chenery? I haven't looked at this in forever. This has earnings coming out tomorrow. I thought it was interesting because I was looking through all the stats. 8 of the last 8 earnings reports for them. So of the last 8 earnings reports, 100% of the time, it was higher on earnings day. That's the only one that can say that. Square is actually pretty close. Square positive on the last 7 of the last 8. So they got a pretty good track record there. And lastly, Volvo shows a 22% decline in sales. I only point that out because they're trying to have put a listing here in the U.S., and they've got a pretty steep price tag on it. And so not good to be showing losses right ahead of that. Speaking of losses, I hear there was some good elections yesterday. I have fun watching it. Obviously I can't relate. I'm not in Virginia. I'm not in New Jersey. But I guess congrats to whoever won if they know who won New Jersey. But Cody mentioned something earlier. I was like, you got to share this, man. This is pretty crazy. What you got?
Yeah, so we got Senate President Steve Sweeney, the longest-serving legislative leader in New Jersey history, is on the verge of losing his own state Senate seat in what could be a stunning political upset. Edward Durr, a conservative truck driver who reportedly spent just $153 on his campaign, leads Sweeney by 2,000 votes in South Jersey.
How cool is that, man? The man, he's a truck driver, spends $153 and is going to essentially win. He's kicking this person out. A lifetime politician, right? I believe he was a lifetime politician up there. On $153, man.
That's gas money. I mean, that's
just like him. What? I mean, an Uber so he can go to a neighborhood and knock on doors or something. That's gas and food. That's incredible. I love stories like that because it's that's the guy, right? I don't know anything about him, but isn't that the guy you want running the show? He's incredibly efficient with his money. Or I guess I could be wrong. He could be hiding it all, right? He could have taken in millions and just been like, I'm going to keep it. I'm a politician now. What are you going to do? But I just thought that was a fascinating story. Wanted to share that with you. So, awesome. Let's take your questions here and see what I can help you with. Giovanni, you want to... let's go one more up. I see a question there. Thoughts on TAN? You're up 40%, thinking of selling out. What's the goal? I'm always going to ask you guys this. What is the goal with your pick, right? What are we doing? And so to be hard on you, right, you got a big gain. I guess you're up 40% from still after waiting through all this. And what's the goal, right? Were you hoping to make 50%, 70%, 100%? You got to know that going into it. Otherwise, you'll never, ever, ever know if you're successful as an investor. The markets are easy right now, and so it's easy to essentially pick a winner and have a profit. But what's the goal? When things start getting a little bit rough, how are you going to know if you're successful or not? So all that aside, I would kind of think this is waking up, man. I would shoot for a little bit more, but you got to know at what point will you say uncle? You know what I mean? You want to average down your last time. That's right. All right, so snap and then pins, right? So I would say I like snap a little bit better here because that's at least trying to hold up. You've got active support there, and it's trying to. Everybody's looking at the same line in the sand. So I like that. I wouldn't mind paying up for this. If you could watch it, just have a good day. It's a little bit above average. The momentum's there. I wouldn't mind paying more with your last bullet just to be sure. And then pins, I would say there's been no real attempt at any bounce here just yet, so I'd hold off. And then also, what's the reason it would stop here? The technical traders have no other reason to believe it's going to stop here. So I'd hold off on this one. I wouldn't be too excited. The power of social media, man. Yeah, maybe. Yeah. Doc saying some of these things are frothy. Yeah, in the semis. I agree with that. Oh, you bought that dip. Did it go? A little bit, right? When I looked, no, it didn't really go much today. So, yeah, I looked at it this morning, saw it was down. I got a little excited, but I didn't come back to it. Not bad. I was looking for more of a washout type day, kind of hoping it would coincide with the market. Like I said yesterday, it's one of those you put on a list. I did check on it, but I wasn't getting the excitement there. So, I don't know that it bounces from here, but I'll tell you, if it does sell off, though, and you do have that day, maybe it just happens tomorrow or Friday or something, I wouldn't be scared by it, right? So if you bought that dip on Visa, don't let another down day or two scare you, you know? Yep. What's the difference between sector yield and return? No, yield is the total dividend paid out by the sector. So if the yield is 3% or whatever, that means the combination or the weightings of every stock, they all pay their dividends, they add it up, the sector pays out to 3% or whatever the number is. The return is the value change in the growth of all those stocks. So if the growth of the financial sector, all those stocks as a whole in their own weighting rallied 10%, your return is 10%. But if the yield is 1%, that means you got 10% and then over the course of a year, an additional 1% in dividends. So your total return would be 11% in that brief example. Yeah. Oh, yeah. Well, good luck, Eloy. I don't disagree with the position. I just, if you're going to be picky, and for me, like, you notice how I haven't mentioned many trades in here? You got the market up so many days in a row just up here. Like, I need to see some give and take. I don't like taking new positions in just a stubborn straight up market or a stubborn straight down market. I like volatility. Cool, though. Cool. Yeah, Chris, that's pretty cool, huh? And I don't even, I don't care if you're Republican, Democrat, whatever you believe, like, we can be friends and all that stuff. I just like seeing cool stories like that. Just a guy getting in there like, hey, I think I should take a shot. Obvious long shot. And he did it, man. I love it. That's how you know he's out there hustling, trying to get the votes. He was obviously doing the work. That's cool. Mm-hmm. You're very welcome, Giovanni. Yep. Agriculture getting bullish again. I haven't seen too much of that. Yeah, I see what you're looking at there today. FMC in general. Oh, I didn't put it on my list. They have earnings yesterday, maybe. Yeah, I don't have any data on that one. I'm not going to lie to you. I got nothing for you. That's a big day, though. For FMC, I can tell you that's a big day. Impressive. Extreme long term for Visa. Looking for. Okay, cool. No, I totally agree with that. Then if you're saying like, hey, it's a long term position, I had to take a shot somewhere at this point right here. Can't blame you for taking a shot. You basically picked the bottom and left until further notice. So I like it. Yep. Oh yeah. You think Facebook's out of the weeds? Meaning just from this pullback? I think what you're talking about. So kind of just did its own thing, right? The market gave you a tiny little pullback. Facebook gave you a whole long downtrend right into earnings. Now there's no real catalyst. So it could do anything. And this is not me avoiding the question. We have the name change factored in. That's December 1st. That'll all happen. Nothing really changes with your shares. It'll just be a different ticker. You have earnings behind you. You have no real pressure from Congress at the moment. What do we have? What's going to cause Facebook or people to say, now's the time? So essentially the pressure is off on the sale, provided the market just does nothing or keeps going higher. But we have nothing to say, yes, this is going to run back to 360. I'd like to make a big bet. So that's kind of how I analyze it there, which is why I don't have much more than that, because I would normally look at that and go, what's the reason? I need something. All the excitement's over with. Yep. IWM target. Oh, good one there. I don't know, because you're at clear skies now, right? This is it. You're living life at new highs. So how do you come up with a target there? What I would do in this case is I would look at every data or every bit of history I could, go as far back as I could, and say, okay, we've got a really, really impressive year for the Russell. When it does that, how often do we finish at highs? Do we finish somewhere near there? You could use the options market if you want, just to see what other people are betting on. So come on, it's all these strike prices everywhere. So let's do end of the year. How about that? End of the year targets. Why do I have so many here? Give me a second. End of year targets. Well, you're spread all over the place there. Oh, because it's not this is not the monthly. We got to do January. My mistake. Well, let's use the December monthly there. We say we've got end of year targets at, what are people trading at here? 240, that's not far. It looks right around 240. All the major bets are around 240, so that's not, yeah, they're basically assuming right in here, which is probably, that, to be fair, that's probably skewed. So the options traders are a little bit messed up. You got the Russell, which just died out all through the summer and all through the end of the year. So you have a lot of people betting that this 240 is as far as it's going to go because of how quiet it is. So I think that's a bit of a skewed representation there. I wouldn't make that bet. You know, I think you got the wind at your sails here, and think of all the small cap companies buying back shares. They're more volatile, right? When a small cap company buys back $50 million worth of shares, that can move a stock, right? That could be a big move there. I know, right? So I don't know on that one. What would I pick for a target? Maybe we'll use that as the research for tomorrow. How often do certain things happen there? Because that's a good question. Now that it's waking back up, it gets back into in attention there. Yeah. Yeah. Sector breakdown in the dojo. No, right? I don't think it is. I don't think it is yet. But you can't do that. Can you do that? So people look at, they say, okay, any breakout. This is the what can we use? Textron. We were just talking about that one. Okay, so normally technical traders is a good example. They'll go like this. And this is just because somebody came up with this somewhere along the way. I don't have any stats on this. You go, all right, look, I'm going to play this breakout. All right? And at this point when it broke out, you were at new highs, right? Pretend you don't see any of this over here, right? Well, let's go like this. Right? So you don't know what's going to happen at this point. So people say, all right, I'm going to play the breakout, but we're at new highs and I don't know where it's going to stop. So what I'm going to do is I'm going to stand this entire line. I could probably do it. Let's just stand this up, right? Something like that. It'll just be off the chart. And then I'm going to take half of it, and that's going to be my first target. So would it have worked in that case? Basically, yeah, it would have worked in that case to take half of it. So you stand this line up, take half of it. That's your first target, right? So Textron now would be the same thing. Only this is your range. Stand it up, take half of it. So if you're looking for the technical side of things, that's great. I don't know you can do that with the Russell. Look at that base. I mean, that's impressive if it makes it that far. You take this whole thing, break it in half, and then go, whoop, this is where we're going. You're at 275. You know, that would be a return for the Russell that it's probably never had in a year. So I think that's fighting it a little bit. I think that would be a stretch. I'm welcome to be wrong on that one. I think we'd all be happy with that, but I personally think that's a stretch. By the end of the year, right? Because you got, 2 months. So that is the end of that one. Did a lot of talking today. I'm going to go stop doing talking now. And I'm going to get ready for our class tomorrow, man. We got it every Thursday. I love doing these classes. So we'll be ready for you tomorrow. We'll see you tomorrow. Those of you that are watching, thanks for watching us here. And hope you'll hit the subscribe button, all that good stuff. And have a great rest of your day.